In our Q2 U.S. summary, we told you that effective rent growth for new leases hit 5.2% year over year. And to get there, that means we had some metros with some really big rent growth numbers. And we're going to take a look at that leaderboard today. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons. He's Greg Willett. And Greg, we've previously talked about how big some of the rent growth numbers have been in the West. Just how much has the West kind of outpaced the rest of the country?
Jay, looking at those rent growth, the leaderboard, I mean, it really is very heavy on the West. We've got 16 of the top 50 markets across the country have annual rent growth for new residents of 6% or better, and 13 of those 16 are in the Pacific or Mountain time zones, leaving just one in the middle of the country and a couple on the East Coast. And so why don't we start out, we'll just dive through this list and then circle back and look for some themes that we see in these overall numbers. Turning to the graphic, Oakland is back in the top spot after Denver had been in the number one position as of Q1. East Bay rents for new residents are up 11.8% since the middle of 2014. Just behind Oakland is Portland with pricing up 11.3%. And then Denver, San Jose, and San Francisco all have rents up roughly 10% on an annual basis.
And then jumping to the next tier, we've got a half dozen markets with rents up roughly 7% to 8% over the last year, and that group includes Seattle, Sacramento, and San Diego. And after that, we have our first market outside the West region, that is Atlanta. And then we go back to the West, Phoenix and Las Vegas.
Rounding out the leaderboard, we've got 5 more markets that have rent growth of 6 to 7%. These spots are Los Angeles, Fort Worth, which is the one market in the middle of the country that makes the leaderboard list. We then jump over to the East Coast for West Palm Beach, and then back to the West and the remaining of the big Southern California markets, the Riverside, San Bernardino area, and Orange County.
And Greg, let's start now looking at some of the patterns that we're seeing in this list. And the one thing that probably really jumps out to us at this point is the big improvement in some of the late recovery markets. And when we talk about late recovery markets, the most notable one among them is, of course, Las Vegas. In Las Vegas, rent growth of 7.1% compares to rent growth of just 1.9% 12 months ago. And of course, Vegas is a late recovery market. It's just now seeing a lot of job growth, and in turn, occupancy rates are tightening up, and that's allowing rent growth to really take off. That same sort of shift is being seen now in the 4 big Southern California metros. The annual rent growth pace is accelerated by 380 basis points during the past year in San Diego, 320 basis points in Orange County, and by 280 basis points in both Los Angeles and in the Inland Empire. And then one more to add to this group, Phoenix, another key late recovery market. Rent growth there is up 350 basis points over the last year.
And Jay, when you talk about the late recovery markets, you're really saying previous laggards are now doing pretty well. And let's look at another variation on that. And there are a couple of interesting spots where we've had a big increase in momentum simply because the new supply numbers have slowed down a little bit to levels that are now a little bit more digestible than they were a year ago. The key example there is Raleigh, where annual rent growth for new residents is now up to 5%, and that compares to 0 a year ago. The other example there, not quite to the extreme that you see in Raleigh, but still meaningful, is Washington, D.C. And we have current rent growth of 1.4% in Washington, D.C. That's still a fairly low number, but it's a lot better than just 0.3%, which was the year ago rate. And then 2 more that are worth mentioning in terms of increased momentum, and those are Charlotte and Orlando. Now, both of those have current rent growth in the mid 5% range compared to about 3% a year ago. We're still delivering lots of new supply in those two, but in fact, demand has been strong enough that those units have been digested and rent growth is able to actually gain some steam.
And Greg, let's shift to some markets that did not make this list. We'll talk about Texas. Only one Texas market made the leaderboard. That was Fort Worth. And then we don't have a single representative from the Northeast, the Mid-Atlantic, or the Midwest.
Let me hit on Texas a little bit. And again, Fort Worth is on the list with some increasing momentum. Not quite making the list, but you actually still have rents that are trending upward in Dallas and in San Antonio. Austin rents are up a tiny bit. Looking at Houston, we've seen a little bit of a loss of momentum, but the overall rent growth number is still a little bit north of 5%. So that's a good number. So again, the Texas numbers are really strong overall. These markets aren't on the list simply because there are other spots that are doing even better.
And then shifting to the Northeast and the Mid-Atlantic and also the Midwest, annual rent growth by metro is pretty consistently in the 3 to 4% range. And those are, aside from Washington, D.C., which you mentioned earlier, and those are some pretty good numbers and certainly consistent from what we've seen previously. Definitely not in line with some of the best metros that we've seen on the list earlier, but 3 to 4% in these markets is very solid. And it's in line also with what has been expected. And most importantly, perhaps, it's probably in line with what most folks had put in, had underwritten for those markets.
Yeah, that underwriting is obviously a big component on there, and as long as you hit that, these are pretty good results. So looking at that list, any future significant movements that we're anticipating?
Well, the whole industry, us included, has been saying for a while that top-tier product is going to slow down in some supply-heavy markets like Denver, Seattle, and maybe Portland as well. That hasn't happened yet, but we think it's something that will happen sooner or later, and that will likely knock those markets down a peg on Leaderboard, although we're still bullish on those spots.
So some interesting metros on the list, and certainly the big story is the emergence of the West. Let's wrap up this video. Before we do, I'm going to put in a plug for the RealPage Client Conference that comes up at the end of July. We're going to talk a lot about analytics and forecasting and hit on that. And then you have a special session that's going to profile various renter segments across the U.S. And so we do hope that some of you will join us in San Diego in the next few weeks. For now, let's wrap up this edition of Apartment Market Dynamics from MPF Research. He's Jay Parsons. I'm Greg Willett. Thanks for joining us.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.